see my screen now. So as always, Wednesday is I try to be a quick one to don't hold anyone back. So where should we look to trade today? So basically it's three topics. As you know, Wednesday is more like how can I say that, like a trade with me sort of thing. There's two people want to join us, so let me meet them. So where should we trade today? So there's three topics. First one is what's happening over the economic calendar. Analyze FinLogic's market sentiment tool, and we're going to be then selecting the best trade options from the market sentiment tool. And before we go any further, oh wow, there's a lot of people joining now. Wait a minute. Okay, before we go any further, I would like to put the risk disclaimer. So I'm going to give a minute for everyone to go through, and then I think we should be ready to start. So I'm going to mute myself, and you guys can read through over, and then I'm going to come back. All right, so hopefully everyone could read everything. You guys think 1 minute is too short? Because I was counting on the clock, and 1 minute is pretty quick to read everything. So if you think that 1 minute is too, it's not much for you to go through everything, then let me know and I'll give it a little bit more. But I think it should be fine. All right, so let's get out of this. See, there's always a problem. Okay, come back here. So first thing is what's happening over the economic calendar. So let's go to FinLogics. So just type finlogics.com on Google, and I will send the link to everyone on the chat. So FinLogics, so you can follow up with me. And come into tools, go into economic calendar, and then you should be with somewhere like that. And then we go into this week and go into these stars, and well, at least me, I highly prefer only medium and high volatility data impact. We do have this very quick access sort of week ahead that shows some of the most volatile items, but I prefer to actually go item by item because sometimes there are some very important ones that don't show here. So I just like to see the full economic calendar for the week ahead. Okay. Let's go Wednesday. So we had the main releases already happening. That's in Australia GMT. So you guys know you can change to yours. Okay. So let's say Brazil. You can change to Brazil or whatever you want. But yeah, basically already had all the big impact news today. We have the NBA 30-year mortgage rate, but nothing will do. Then what will happen midnight 30 is the one. So that's what I'm eagerly waiting for. We do have inflation rate month over month to be expected to be a bit below the previous. So previously were 0.4, now is expected to be 0.3. Let me grab this thing here. Where is I thought we had like there you go, spotlight. Yeah, so the inflation rate month over month expected to be a tiny bit below the previous. Most likely it will happen because it's for the month of January, not for the month of December. Then we have the core inflation rate expected to be a tiny bit below as well. 3.2 was the previous, now it's expected to be 3.1. Then we have the core inflation month over month expected to be a tiny bit higher. And we have the inflation rate year over year and the CPI for January, but that's a different data point. So Looking at here, majority of the reports are expected to be a cool down, okay? Because if we count off as the month over month to be 0.1% less than the previous, the year over year is expected to be the same, and the year over year core inflation is expected to be 0.1% below the previous. So we have two below the previous, one as no change and one higher. Okay, so what the market is expecting is a deflation sort of aspect for this data point, for this data set. If something happens on the opposite side, we may have a strong US dollar, okay? And that will impact Euro dollar shorts, Aussie dollar shorts, USD JPY longs, etc., etc. We're going to have a look later on what we're going to be trading, but it's good to know that on this scenario, if something happens out of this scenario, then the market will be having some sort of a volatility. If something happens on as expected, nothing in volatility we will do, all right? But that's tomorrow, midnight 30. Well, it's for today for you guys, most likely. But if you're in Australia, it's midnight 30 from tomorrow, Thursday. Then still tomorrow at 6 p.m., we're going to have the GDP from UK as well as the German inflation rate. Okay, so that's very important because from German, we can expect the whole Eurozone. Okay, so Germany is one of the biggest countries inside of Europe. And as I always explain it there, right? I like to see German sort of like a forward guidance from Europe because majority of the times German data gets out quicker than Europe. And and if you look at here, they are expecting a deflationary aspect. Okay, so that's quite a big steep decline, I would say. So from 0.5% previous, expected to be at negative 0.2 now. So that's a big change. And the inflation year over year from 2.6% to 2.3% now. So 0.3% less than what it was before. And then we go to the GDP for UK. Not much changes here. Okay, so from year over year, 1% as the previous, quarter just a tiny bit below the previous, so negative 0.1. The GDP year over year preliminary, is expected to be 0.1% higher, 0.2% higher, so from 0.9 to 1.1. Then we have the month over month from December, no changes as well. And that should be about it. And on Friday, we have the PPI for USA and the core PPI for USA as well, midnight 30. That is really, really, it's going to be really interesting. The producer price index, that's going to be really interesting because it's expected to have a tiny, slightly higher for the nominal one, and for the core CPI is expected to be 0.3% higher. So, in my opinion, the nominal one may be correct, but the core CPI, I'm not too sure. It may be a little bit below that. Okay, it's high. It's hard to say that it's going to be higher than this. And then on Saturday, for me in Australia, we have retail sales for US. That's a very awaited data point. So at negative 0.1% from 0.4 previously, okay, month over month. We can possibly expect this data to be weaker or stronger if the inflation comes higher, then meaning that that data will be higher, okay? Because we know that the population is spent more. And we can actually see the breakdown of the prices into the CPI. So we can see the shelter, we can see food, we can see energy, etc., etc. So all of this will sort of guide us to await already this data of the retail prices. Okay. Any questions? Everyone is good? Okay, no questions, so that's fine. Yeah, maybe we have a question. All good, no? Yeah, this week it's kind of, I would say, it's low week. We did had Trump proposing 25% tariffs on steel and aluminium, but there's a big thing here because what happened is it was like, I'm going to impose 25% tariffs on aluminium and steel with whatever and anywhere in the world. So any component that comes with steel or aluminium will be taxed 25% on that aluminium. So let's say you have a car, right? The aluminium parts of the car will be taxed 25%. So basically, if the car is 20% of the composition is aluminium, that 20% gets $10,000. That $10,000 will be now $12,500. Okay, so we'll add even more into the prices. I've made a video on YouTube today. I don't know if you guys have time to watch that, but I definitely recommend watching those videos. It's pretty helpful, and I try to bring it down, everything that I possibly is studying or seeing. And I've mentioned that it's what Trump's trying to do is pretty chaotic because he's implementing tariffs on pretty much everything, and that can become a trade war because if countries sort of get together and they're like, okay, if they don't want to sort of let us build our economy with them, if they don't want to be our partners, I don't want to be their partners as well. And then the trade war begins, like, oh, USA puts me 25. Okay, that's fine. I'm going to put back 30%. All right. And then USA goes on, all right, you're putting 30, I'm going to put 30 as well. And then it goes like that. So there's a lot of things happening with Trump mind, I would say, at the moment. And so basically all of this is strengthening the US dollar in some part, but is strengthening even more the gold prices that we're going to get back in a minute. But you don't know, but the Australia is one of the bigger exporters of aluminium and steel for USA. So basically, Trump said, I want impose 25% tariffs on Australia. And what happened with it was that the Australian dollar is strengthening. So primarily, when he said that he's going to impose 25% tariffs, the market dropped over the weekend. Okay. But then when he say on the week that he wouldn't imply the 25% tariffs on Australia, the Australian dollar starts to rise. Okay, so from here all the way to where it is trading right now. So all the way down from 62,100, 61,200, now trading at pretty much 63. Okay, so pretty much 1,800 points, so 180 pips higher than it were on the week. So leading the Australian dollar to be one of the strongest currency to be traded at the moment. Okay. Now, if we look at gold, we can see that the price is non-stop rising and pushing it to highs and highs and highs. It just hit another all-time high today or yesterday. Just depends where you at $2,941. All right, pretty much $2,942. Gold is one of the best performing asset classes into 2025 so far. We've seen more than 20% increase in prices already. Okay, I can't measure it there, but I'm pretty sure it is 20%. Let me check. Gold. So from January this year, right at the beginning of the year, right here, we can see, there we go, 13%, sorry, 13%. All right. And now it's trading at 10%, so 2% pullback. Most likely, we can probably see gold continue to go higher. I think, as I've mentioned yesterday, we can possibly see gold at 3,000. Okay. Very soon, my friends. But anyway, so let's get back to it. So we saw what's happening over the economic calendar. So let's analyze the FinLogic's market sentiment tool. So how you get access to it is come to FinLogic's. I've sent a link on the chat. Go into tools and then market sentiment. All right, let it load. Cool. So market sentiment is the strategy we're using at this moment, and it's pretty simple. Okay, we just try to trade the short end of the tool. So in this case, we have 99% of the traders shorting GBP AUD, and there's only 1% of the traders longing GBP AUD. So we would be looking to go long. Okay, so we try to short the minority. So basically, we don't want to short; we want to long. Okay, hopefully everyone got it. So let me send the link to everyone. Logics, get sentiment. Okay, cool. And we don't trade commodities into this strategy and either indices. Okay, so we only trade the Forex pairs. All right, so from every Wednesday we come here and analyze all of these pairs. A lot of them are neutral today, so that's not good. And we only have 2, 4, 5. We only have 8 pairs today. Okay. Still doable. So let's open charts. First one is GBP/AUD, but there's already something here, okay? Because I've mentioned that because of the 25% tariffs not applicable to Australia, Australian dollar is getting stronger. So there's no sense pretty much for us to be longing GBP/AUD, okay? Australian dollar should be weaker for us to be doing that. So GBP/AUD. Let me zoom out. Sorry. So yeah, we can see that since the beginning of this week, the market has pretty much like strengthening a lot. As I say, the Australian dollar is one of the strongest currency pairs at the moment. It's not the US dollar, because if we look at the US dollar is trading at a not that well prospect, I would say, but we can expect continuation to the uptrend most likely for this month. Okay, so now coming back here, GBP/AUD wouldn't be the best trade scenario, I would say, just because of the Australian being strong. I would be looking to short that market and not long this market. Okay, so but as we already are on the target, so let me grab this. For those who know, I'd like to target those consolidations. Sorry. So we are already hit the target, 50% of the consolidation, and we don't have anything else to the bottom. This is not a consolidation, but yeah, if we go lower, we see on a lower time frame, we are actually coming back to another box on the top. Okay, right here. So comes down, breaks the top, continues to go at this high. Okay, at this price here, somewhere around the 1.98. So yeah, wouldn't be looking to go short on GBP, to go long. Sorry. Same for Euro Aussie. Euro Aussie expected. Everyone is short. We should be going long, but again, Euro is strong, but Australian dollar is stronger. Okay, so Euro is not that strong. Okay, it is strong in a sense that it is holding very well at the moment. But if we look at Euro Aussie in the past couple months, we can see that things are not looking great for the Euro against the Australian dollar. Okay, so I think there's more possibilities to be short in Euro Aussie than actually longing it into the market at the moment. Okay, let me drink some water, guys. Just a second. Okay, so sorry. So yeah, Euro Aussie, I wouldn't be looking to go long on that. I'd rather prefer to go short. Euro pound, we already had a trade on Euro pound long last week. Unfortunately, we got caught stop loss. Let me just load that. And then we hit stop loss, and then the market goes boom to our side. The stop loss was not well adjusted. Friday. It was somewhere around here. Yeah. Can't remember where it was now. I think it was. Anyways. But yeah, look, Euro pound is a tricky one because after we took that trade, I was like, it's not quite the one, because let's first analyze the trend, okay? If we just zoom out, we are into a consolidation at this moment, okay? All right. So basically here is some sort of consolidation, and we haven't passed through 84,600, and we're bouncing back to 83,100. Sometimes we break it and then come back and then break it again, came back, and now we're at that level again. So there's maybe a possibility for longing it, only if we wait for the market to get back somewhere around these levels. I think that would be the safest side, because at the moment, the risk exposure wouldn't be the best to lead. Yeah, I'm checking Euro pound now, Zodwa. So, as I say, if we have a touchback somewhere around here, then up to this level would be good. Let's see how the ATR is. So we use the ATR to see where we should be placing our stop loss. I've made an adjustment for the ATR. We're not going to be using ×6 anymore. We're going to be using ×3, right? So we're going to be reducing the stop loss by half of it, and we're going to be increasing the take profit by a full point. So that's pretty good. Reducing the risk, increasing the reward. It's always what we want. So at the moment, we have at 42 ×3. We have 126. So 126 would be somewhere on here. Yeah, below those lows. So if we enter the market right where my mouse is at the moment, on this blue line, 300, we should be putting a stop loss somewhere around 27.97, and that would be the goal, right? That would be the best option to do. So if we wait the market to go there, and then 126 is somewhere on here. Is it 126? Let me see it again. Calculator, 40 times 6. Gosh, 40 times 3, 120. So yeah, 120 is somewhere on here, but still not below that trend. So I'm going to slightly adjust it to be below this level here. And then the take profit, we're going to do times. So the take profit is always at least 1.8, but at this case, I think we still have room. So I'm going to do times 3, and we're going to be 360. Okay, so times 3. So 360. No, we can even put more. Somewhere around here. Yeah, 1 to 3 risk reward. So that would be the good setup for Euro Pound. But again, I would likely to see it slow pullback at this region and then continuation up. Okay. Next one, we have Euro Pound, Euro JPY. As I say, JPY, I'm not gonna be looking to trade again because of the Bank of Japan. So there's too many volatility at the moment on Japanese yen. And on the 12th of March, we're going to actually have the signed paper about the 25% tariffs on aluminium and steel. So if we have that passed on, because it's still a proposal, okay, it's still just a proposal. But if we have that passed on, then Japanese yen will be very strong, and gold will be very strong as well, because majority of the money will run through safe assets like gold and Japanese yen at the moment, paying 0.5%. So I reckon we should wait for entering any JPY related pairs. Aussie CAD is neutral, pound dollar is neutral, Euro dollar is neutral, Aussie dollar is neutral, New Zealand dollar is neutral, and then we have yen again, and then US dollar CAD bearish. Okay, so let's have a look at USD CAD. USD CAD. USD CAD is what? USD CAD is bearish, so short. Yeah, that's a good opportunity, okay? Because we have the Canadian dollar getting stronger and the US dollar sort of holding up. What I would like to see is a break through this level of 142.78.4 and then a retest, and then we could be looking to short that. So let me just, oh gosh, let me get it, the average true range here. Go. So we are at 223 at the moment. That's on a 4 hour. So let's go for the 1 hour. So on the 1 hour, we are at 101. So 101 times 3 will be 100 and let's say somewhere around 110. So what 310. So what I would like to do is, let me take this off, and then 310 short, 300. Okay, so 310. So what we can do is we can wait for the break, and then we can sort of wait for the pullback, retest, and then a continuation down. Okay, maybe we don't get this trade like this week because of the CPI tomorrow. the best scenario would be waiting for the CPI before entering this trade on short. Okay, just because it can most likely react pretty heavily. All right, and once it reacts, and also we sort of know the direction, then we could be looking to even longer. Okay, so Sweet says, what if it breaks above? Well, if it breaks above, I would like to long it, especially if the US CPI is stronger. Okay, if the US CPI is stronger and it breaks above this level, then yes, most likely a long position would be great.
I have a question.
Yes, go for it.
Um, Based on your videos on YouTube, you've been bullish on the US dollar. Why would you be looking to short it if your bias is bullish on the dollar? It should look for longer.
Yeah, well, that's a good question. So basically, this webinar we look to trade the FinLogix tool. So it's just so you know, it's a more easy sort of approach, so everyone can trade it with me. But yes, you are correct. If we look at the US dollar, I've been saying that I'm bullish on it, and the sort of right position to be is on long US dollar CAD. I do believe that this trade can still work out on the short side if we don't have any more things happening from US. But there's one point. If the CPI comes in higher than expected, then US dollar will be much stronger, and we will see US dollar CAD going up, euro dollar down, pound dollar down, etc., etc. So my opinion here would be if the US dollar CPI, sorry, if the USA CPI comes higher and breaks this stop and then pullbacks, most likely, yes, we can continue to see a higher move. Not too sure where, but because there's not much targets on this scenario, and I don't work with imbalances or anything like that. So most likely that would be the case. Hopefully I answer your question.
That is a pitch.
Sorry?
I'm sorry. I'm sorry. I thought I muted myself. Thank you for answering my question.
Okay, all good. No worries. Euro CHF says bearish. So let's have a look at Euro CHF. Let me add another one. Euro CHF says to be shorting Euro CHF. So that's a 1 day. Wow, that's a daily chart. Let's go day 1 hour. Okay. Euro CHF short. Okay. Well, it looks a good, but you know, it sort of looks good in the concept, but because you know the whole world is being crazy at the moment, and then we have CHF has always been the safe haven. So most likely, yes, that would be a good trade, but at the moment, it seems to be very, very like stretched and can possibly come on that high of 92,200. So I would stay away from this one. The euro is not that strong because if we look at euro dollar, for instance, it's not moving. Okay, it's not this price. That's strange. But if we look at gold, for instance, I think gold can sort of pull back a little bit, continue to pull back a little bit around the level of 2,860, and then a continuation up. I've been in GBP JPY since 188, 250. Bulls have power. GBP JPY is most likely going up because the Japanese yen index is currently falling. Probably a pullback. GBP JPY. You have been long since which one? 188, 250, 188, 250. Okay. Okay, yeah, that's a good trade. Not too sure what was your rationale behind that trade, but yeah, maybe you can still even go up to 192, 800. There's a little box here that we could be looking to trade higher. Okay, so yeah, if you keep holding this trade, it would be really good. I tried long in Europe yen, but I got liquidated before the rally took off. Yeah. Yeah, so for this week, pretty much US dollar CAD, there's two options. If the US CPI comes higher and breaks to the top, I would be looking to trade it long. If it doesn't, then trading short after the pullback. Euro pound looking to trade long, but only if it gets back to this level. Euro CHF staying away, and gold is my favorite trade at the moment. Should be looking to go long after this pullback. Okay, so we had the break off the top of the last top right here. Okay, over there, and then we have this Fibonacci. So we can still come a little bit below, and then we should be looking to go higher. Okay, so that's my opinion on gold, and then targeting 3,000. Okay. So, all right, guys, thank you for coming today. Hopefully it could answer everyone's question and could give it a little bit of, a view on the market and what's going on. I will be here tomorrow again, 5 to 6, same time, Australia time. And I'll wait to see everyone back. Thank you so much, and see you tomorrow. Yes, go ahead, Sweets. Let's have a question. The CPI, which should we be looking out for? Yeah, the CPI I've done the analysis on the beginning of the video, on the live, but CPI is pretty much waiting to be neutral. Okay, there's a possibility of it comes like as expected, but because the market sort of is priced in already on a lower CPI, gold has been going up quite a bit. So most likely we can see on the lower side, okay? Most likely. That's my opinion.
So do you think that...
yeah, go ahead.
Do you think if it comes lower, that means the retail price that is coming out on Friday will also come lower? So we should be expecting a weaker dollar.
Yeah. So if it comes lower than what is expected, it will be weakening the dollar. If it comes lower than what is expected, if it comes as expected, we won't have much volatility. It will be just like up and down. That's it. If it comes higher than expected, then we're going to be strengthening the US dollar. So if you have the release in one side and then the DXY chart in the other side, what you can see is if the release comes to be below expected, what will happen with the US dollar is we'll drag down. If the release comes to be as expected, we have up and down and a continuation on the sideways. If we have a very high CPI, higher than expected, then we have a move higher on the US dollar index. So that's usually how it goes by the, it has always been like that. Okay.
Thank you.
Oh, good. All right, guys. Thank you so much. I see you tomorrow. And that's it. Have a great one. See you guys. Bye-bye.
Yeah.